Hi Andy, great to connect with you for episode 2. Hopefully everyone has watched the previous episode in which we talked a bit about your career journey, what it's like to start your own business. And today we're going to really lift the lid on your business, on the sector that you're in, and talk a little bit more about that. So, Andy, tell us a bit about Asset Living.
Sure. So, hey, Charlie, great to see you again. Yeah, so Asset Living is a property investment business, and we're all about solving people's problems to do with property. So part of it on one side is the property owner's side. Okay, so imagine that a property owner has sold their property, it's gone under offer, and then it falls through and they're a bit stuck. Or imagine that somebody's got a property and it's got a short lease. Or imagine that somebody's got a property and it's got subsidence. The vast majority of property owners are fine, but then there is a certain number of property owners who have got a problem. So we're all about helping those property owners to solve their problem. And through that, we go and add value. We may do a refurb, solve the problem like the lease or the structural issues. And then we'll, at the moment, we just create properties that we hold and then we rent them out to tenants. On the other side, we also work with a body of investors, and investors sometimes seems like a bit of an inaccessible word, but it's basically people who have got some money who are looking to get a great return. So of course, with interest rates at record lows, with inflation as it is, we have people come to us with money who sometimes we invest it as just a loan and give them a fantastic return, or sometimes we buy properties together in what's called a joint venture. So we'll own them together. So they'll own half or a proportion of a property, and then they'll get both the cash flow and the capital uplift for that property. But yeah, we've been in business now for 6 years. We have raised over £1 million in private investor finance.
Wow.
Across different routes, both the joint ventures and the loans. We've probably housed over 200 tenants. At the moment, we've got about 50 rooms, which are for young working professionals. So yeah, we're all about solving problems and providing quality products and customer service for our customers.
Brilliant. That's really exciting. I think, viewers on this channel are probably kind of young professionals. Maybe some of them are even in your rooms watching the videos. If you're not, then you should be subscribe. But no, it's really exciting. I think this is a slightly different way. We know the traditional property investment, buy a house, very long time, but that's changing, and COVID price changing the house prices. People are thinking about property investment in a different way, and your business model is, I would say, relatively new. So I'm obviously also in the fintech space, and we're here at Networther. We're very much about helping people to build their wealth, and this is an alternative way to do that. If somebody was hearing this and thinking that sounds really interesting, but I don't know anything about it, how would you explain it to them in a way that would help them understand?
Yeah, well, I think the thing about building wealth is to know what your goals are. Okay, so I quite often have conversations with people who say, I've got £50,000, what can I do? And there's lots of things that you can do, but you want to know where you're trying to get to. So for some people, it may just be money sitting in the bank and they want to just get a great return on it. They've got no interest in tenants or buying property. They just want to get a great return. Other people may say, I've got a bit more money, and they may say, I want to go and create a portfolio for my children, as a bit of a legacy. So it all depends on where people are trying to get to. And then I try and look at their sort of goals and their resources, and then to look at what I can offer them to help them to achieve those goals. So previously we've worked with, relatively small amounts of money, so maybe £5,000, all the way up to somebody who lent us about £250,000 for 12 months, and then we gave it back again. So it just depends. It's about having those conversations and understanding people's sort of ambitions, really.
And that's what I really like about your business model. It's not a kind of transactional, here's some money, here's the return we propose, all through a portal, completely faceless. You're very much about getting to know people and really going on that kind of joint journey, which is sorry, go on.
Yeah, with our investors is, as you say, it's not a faceless portal. I mean, we've worked with family members, ex-colleagues, friends, family. It's all about people where we build up relationships who know, like, and trust us and see what we've been doing, and then we go and help them in what they're trying to achieve. And that's part of the, with the amount of money involved, it's all about understanding also their situation, because we're not going to take someone's life savings to invest, because, like all investments, there is an element of risk that we mitigate, and we explain how we do that. But it's all about understanding the person's situation and where they're coming from, to make sure that we do it in the most ethical and appropriate way possible for them.
Yeah, and I think that's really important. I think, when I think about Networther and our values, we have ethical, transparent, honest, empowerment. And it feels like our values and what both of our businesses are about are very much aligned. And like we say, this is a slightly new business model for a lot of people, and it's kind of quirky, right? So what inspired you to set up Asset Living?
I think it was part of it was all about trying to help others. I don't know about yourself, but I didn't live in some brilliant accommodation when I was at university, and although we don't rent to students, there's a growing requirement for professional shared accommodation. I mean, in Southampton, if you were to go and get like a 1-bed flat and then they'll add all the bills in, you might be talking £900, whereas with us they can get all the bills for half the price, and it's a social environment, and they meet new people, and all of the rest that comes along with it. And also it's a bit of flexibility. After 6 months, people then just have a 1-month notice period. They're more transitional. So part of it was providing a fantastic product to our tenants. And we'll talk about this a little bit later, but also we're moving into more of the supported living space. So a different tenant type. It's always for us around quality, fantastic service as well. We have our own property management company, so we don't use a high street letting agent. We have our own letting agency as well, which manages the tenants to make sure that we have a great service, whilst also providing a great return for our backers.
And I mean, I'm honestly, as someone who's very much at the start of the journey, I'm in awe of what it is that you guys have achieved in actually what's a very short space of time. 6 years is not a lot. I'm sure it might have felt like a long time at times, but actually it's not at all, right? And no. To have especially overcome the turbulence of the last sort of 18 months or so, I mean, what you guys have achieved is absolutely incredible.
No, thank you.
And thinking about some of the challenges you've experienced in this business, particularly in this sector, what are some of those challenges you've had to face, and how have you overcome them?
Yeah, I mean, with all businesses, you're looking for the opportunities, the customers, or the property. So part of it is trying to find people with those problems. So as I said, there's a relatively small amount of people who have these types of property problems. So they're sourcing the property deals, and then working through with them the right solution. There's the usual challenges around funding. So whether it's mortgages and all the information that companies need to know to financial products, legislation change. There's a lot within this space. I mean, within the last sort of 4 or 5 years, there's been Section 24 around how properties are taxed or treated within your own name. The usual legislation around health and safety. I mean, it's all for the most of it is all for the better, but it's still additional things that have to be managed and kept an eye on. And as I mean, COVID is COVID. That's it. Almost goes without saying that's provided a lot of challenge around tenant demand, and the ability to rent rooms. But we have a great product. We have a great team who rent our rooms, and so we've managed to sustain ourselves. And we've definitely seen a pickup in the last few months, and it's a lot more buoyant.
Yeah. Yeah, it's obviously a really challenging time, and it's really changing things, and I think it's changing how people think about property and how they want to interact with property. That's different to, you know, a couple of generations ago, and even a few years ago. But there are obviously a number of people that do still want to purchase property, and obviously you've got a huge amount of experience. We talked in the previous episode around the 9 flat viewings in one day, which is an absolute feat in itself. So obviously you've got lots of experience in purchasing property, and I know one of the reasons that people are talking to us in Networther is because they're saving for their first property, for example. So with all your experience in the sector, for people looking to get into property investment or property purchasing, what are some of the things you feel that they need to look out for? Kind of what have your experiences been that they should definitely watch out for?
Yeah, I mean, firstly, the hat that you wear for property investment versus purchasing for yourself are very different. So for example, when I purchased where I currently am, which is my personal property, I had to do quite a significant shift in my thinking compared to an investment. I mean, investment properties are very much around being clear on the main things like, can I tenant it, and what's the return on my investment? It's the numbers, it's not the feel, it's not the intangibles, you know, it's very much around, is it a good deal? And making sure that it works from that side of things. Something common across both is making sure that you have a very clear financial history, a clean financial history, because almost certainly you'll be buying a property with a mortgage, either in a company for an investment or yourself. And so it's making sure that you have all of your ducks in a row when purchasing, because if there's any blip, that can scupper it. And I mean, we work with a broker. Now, I know that some people think, especially for a residential property, that's an unnecessary expense. But I mean, from my point of view, they represent your position to lenders. And so working with a reputable, fantastic broker can really help you with that big part of the property purchase. I would say know your limits in terms of how far you can realistically afford things, and really be aware of all of your other costs and outgoings so that you don't overstretch yourself. And a big part of property these days is the deposit.
Yeah.
So leverage schemes from the government, Help to Buy, or you know, small lenders who don't need a massive deposit. And if you don't think you have a big enough deposit, then just take action and save every month. You're not going to go from no deposit to the deposit. You know, even if it's going to be 24 months, just look at where you're trying to get to. What value property do you want to purchase, and then try and set a plan over a period of time to work towards it, and you'll get there.
And actually, it's great timing that you say that, because I have also so the previous video, released 2 videos before this, is about how I saved for my deposit for my first property. And one of the things one of the features we got in the Networther app is a goals-based approach to saving. So, you know, you can input what your goal is and when you want to achieve it, and then we'll help you to kind of track in real time how close you are, and give you some advice on, or not advice, it's a very loaded word, give you some tips on how you can adjust some of your expenses to help you, and also help you find the right investment options for you to help get to go quicker. So I mean that's really important. I think one of the things I found as well when you're saving to buy your first property is properties are a moving target. The prices are fluctuating all the time, and often not in your favor. So I also found that in addition to watching your savings and how an active saving and active investing, it's also actively watching the market to know, is it moving away from you, and actually you might need to adjust your goal so that you don't wake up and be like, I've hit my goal, oh no, and get a terrible nasty surprise that the property prices have just shot up by 50 grand and it's now 2 years delayed.
Yeah, I'd also add, don't buy somewhere that you're going to grow out of within 6 months. Whether it's maybe you're thinking of moving in with a partner, or you know, maybe people are thinking about children. Don't put yourself in a position where you almost have buyer's remorse within 6 months of buying a place because you've now outgrown it. Now, I know that is a balance between what you can afford versus what you need, but always try and have a bit of a long-term or a medium-term view on what your goals are. I mean, personally for us here, we fixed for 5 years because this isn't a forever home, but it also gave us the security of knowing that our outgoings will be the same and we're not going to be looking at a remortgage within 2 years. So, of course, if we knew that there was a job move or some other reason to move coming up, we wouldn't have done that. But just although the interest rate's slightly higher, we fixed for 5 years so that we knew that nothing would change over the course of those 5 years.
I think that's really interesting what you're saying around the not outgrowing, because I know so it can be really tempting to be like, I just want to buy somewhere, I just need keys, I just want to feel the keys in my hand, no, it's fine. I mean, I looked at some absolute shockers of places, and I was almost tempted to buy them because I just want to buy somewhere. And I'm so glad that I didn't buy a studio flat, which was actually had to go through someone's house, to go through their garden, to buy a studio property that was basically a bedroom with a toilet.
Right.
I'm very glad that I waited a bit and really found the right place. And
a phrase that we have is, don't become a motivated buyer. I know that you want to buy, and especially if you've the cash sitting in your bank, you may sort of trying to burn a hole in your pocket. But yeah, just make sure that you buy what is right for you at the right time.
Yes, yeah, I agree. And I think, the whole property industry and the whole property investing industry and also prop tech is also very much up and coming. I mean, I'm more in the fintech space, but I'm keeping an eye on prop tech because the two are related. So there's obviously lots of exciting things in the industry. It's been very dynamic over the last 18 months. In terms of the future, where do you see the industry going?
So I think that firstly, the requirement of our tenant type is changing. Whether it's people joke that if you lose the electricity or the gas for 24 hours or 48 hours, they won't really complain. But if you lose the broadband for 20 minutes, they're straight on the phone. So things like just the accessibility of good quality, internet, outdoor space. Now people want somewhere. A lot of our professional tenants are moving into the area for new jobs because quite often they're graduates, so they want the ability to socialize, whether it's internal communal space or whether it's a garden for that sort of barbecues or whatever it is. In the industry at large, I mean, there's been a lot of controversy over leaseholds, and the unfair practices and challenges around that, and ground rents as well. So I think there will be shifts around the whole leasehold part of the market. I don't know if you know, but they are choosing their use classes for quite a lot of commercial properties. So there used to be quite a lot of different use classes, and they're now simplifying it. So you'll be able to change one type of property into another more easily, rather than requiring full planning permission. But that's opening opportunities for converting different properties into different types. So like a dentist into a restaurant. I don't know if that's an official one, but it's an example. But also to go from a commercial to a residential. So you may see sort of office blocks that are going to be converted into residential quite a lot as well. There's the whole co-living movement, which brings in, it's not just a HMO, so a house in multiple occupation. It's more around the environment. It's about the background to the property and the facilities, and that's definitely a lot more popular. And I would also say that there's a lot of difficulties for disadvantaged people, so people with additional needs, abused women, emergency housing, people with disabilities. Councils have a statutory obligation to find accommodation for those people, but they don't have the properties to provide. So there's a move to a lot more work with the private sector to provide that type of accommodation, and that's not something that's going to improve anytime soon. So there's a whole, that's the thing about property, is you can go from a massive 30 sort of flat former commercial unit all the way down to a 2-bed terrace, which is used for supported living. There's so many different angles and opportunities and places where you can make a difference, is what makes it, on one hand, very overwhelming, and you have to control that to focus, but also it means that there's so much opportunity and variety to get stuck into something that you are interested in.
Which feels like a really good time for the final question, which is around, you know, this was the industry trend, but specifically for asset living. I mean, you guys have come such a long way, but what's next?
Yeah, so we are continuing our creation of high-end professional HMOs or co-living spaces. So currently in Southampton and Bristol, but it's also, we are diversifying around the supported living thing. So having lots of conversations with councils, registered providers, to understand their need in different parts of the country along the south, and then to start finding properties, helping property owners, but then changing the tenant demographic to help those people who are in need, and also help the councils out as well, rather than spending money on putting people up in B&Bs or hotels. So we're sort of continuing the professionals and then growing into a secondary tenant type.
Brilliant. I think, you know, being able to help people from a whole spectrum of life is so important. I think, you know, it comes back to the word that we used at the beginning around being ethical and doing what's right for people, and, you know, doing what is right and what's good for people. I think it feels like that's a really great time. There's a great need in the market as well for that type. So
yeah, correct. Yeah,
absolutely the right time to be diversifying there.
Yeah, agreed.
Brilliant. Well, Andy, I will drop a link to your website in the description, and also to your LinkedIn profile. If anybody is watching this and wants to reach out to Andy, please do. It's been great to chat with you. Thank you so much. Very best of luck with asset living. I know you guys are going to go far.
My pleasure. Thanks, Charlie.
Thanks, Andy.
See ya.
Stop.